Hey, what is happening, bulls and bears? It is a late night video for this particular channel here. Thank you for tuning in. A lot of you may be watching this on Friday, but as I'm recording this, it is Thursday night, June 29th. Most of you watching this on Friday, June 30th, which is the last day of the month. And we're right around halfway through the year, right? The end of the second quarter, the end of the 6th month out of the year. And time is flying, and another prediction came true. We've had hundreds of predictions come true on this channel. If you've been on this channel over the last few years, you know. We said before 2020 something big was going to jump out of the woods, and look what happened. Something else just as big, I think, is going to jump out of the woods very, very soon, and I think likely by the end of this year. And health crisis 2.0, but I think it's going to be something different. We're talking international conflict, war, something in that genre, so to speak. But we'll keep an eye on finance here and kind of stick to this, but it will disrupt the financial world as far as what I think is coming to the shores here. And it's going to be a big scare for a lot of people, and people that aren't prepared, and people that weren't putting away supplies and food. You're going to be I think kind of sorry that you weren't prepared. But let's get into the financial news. We'll come back to that more here in a few minutes. The Dollar Tree plans to raise prices up to $5. What did I tell you? I said at the time they came out with $1.25, moving from $1. I said, watch, they're going to raise it even more, and they'll probably go like the 99-cent store, because if you go to the 99-cent store, it's not just 99 cents anymore. There's items $5, $6, $10, and I said the Dollar Tree is going to be next. And I guess they've been doing this for a few weeks, but not at my local store, so I didn't notice it until I read this article here out of Business Insider. I knew it was coming. You all knew it was coming. No surprise. With inflation, there's probably not going to be any more dollar stores around in a few years, because you're not going to be able to hardly buy anything for $1. Well, they'll still call themselves the dollar store, but more and more items are going to be more than $1, put it that way. And the packages are going to continue to get smaller. So that, I guess that's one way they can kind of get around it and trick people. You know, they'll sell you 3 pieces of candy now for $1.99, and people will think they're getting a bargain, right? Because it's $1. Dollar Tree plans to raise prices up to $5, proving there's no such thing as a dollar store anymore. That's the headline out of Business Insider. If you go back when they did the $1.25 thing, it's been over a year now. Has it been 2 years yet? Anyways, doesn't matter. We predicted it, and a lot of other things that we predicted here are going to happen. Keep an eye on us for that. Housing conditions worsen for home buyers in May. Another thing, so many people said I was wrong. The housing market's going to crash. We'll talk about Jeff Bezos here in a minute and how he's connected with the housing market. Housing conditions worsened for buyers in May. This is out of Yahoo Finance. The number of homes on the market could not keep up with demand last month, and buyers were forced to face off with each other. Even at these prices, we're still seeing bidding wars. Prices went up here again in San Diego just month over month from April to May. And I think when the June numbers come out, it's not going to be a pretty picture for buyers. We've got too many people, not enough houses. We've got banks that are completely unleashed. They have no reserve requirement, meaning the too big to fails can continue to give out mortgages that they shouldn't be giving out. I say they shouldn't be, but if they're too big to fail, they might as well just give out mortgages to everybody, and they might as well just keep lowering the standards to get a mortgage, because if you're always going to be guaranteed to be bailed out, which is too big to fail, then what's it matter, right? So you're going to see more people buying homes that shouldn't be buying homes, and getting in over their heads. And if something hits the fan and people can't pay their mortgages, guess what? They're just going to put a freeze on the mortgages, just like they did in 2020, right? So the bust side of the economy has almost been taken away, unless something so huge happens that the economy is going to be forced to go bust. Again, think 2020 2.0 here, which I think is coming up very soon.
Reign in wealth like King Charles with a gold IRA from Noble Gold Investments. Just as King Charles's magnificent gold crown symbolizes wealth and power, a gold IRA can fortify your own financial kingdom. Imagine the confidence that comes from a retirement backed by a tangible, proven asset, gold. An asset that's not at the mercy of unpredictable market swings. A gold crown may not be included, but isn't a future free of financial stress a worthy throne? Like royalty, enjoy the luxury of choice. Gold, silver, platinum, or palladium, the realm is yours to command. Fend off concerns about economic downturns and let your wealth thrive with the timeless security of precious metals. This month, the first solid quarter-ounce gold standard bullion coin ever issued with King Charles III's image can be yours with your own qualifying gold IRA or 401k rollover of $50,000 or higher. You can't go wrong with Noble Gold Investments. Call Noble Gold Investments at 877-646-5347 to get started or visit bullboomgold.com. That is bullboomgold.com. Link down in the description of this video.
Let's talk about this here. The new mortgage rules make it easier for low income and people with bad credit scores to get qualified for a mortgage. And the people with better credit scores are going to be paying for it. So the current administration, that was their bright idea, to keep the bubble inflated. And another thing that we predicted here, I said, watch, they're going to find new, creative, and crazy ways to keep the bubble inflated. And that's exactly what is happening. This is out of Business Insider also. This recession indicator flashed again as Fed signaled more rate hikes. It hasn't been wrong for 44 years. Okay, recession signal or not, guess what? They can just change the definition of recession, and then you'll see, oh, there's no recession because now we're going to talk about this number instead of that number, and so there's no recession. You see that and how they do that? Just like they've changed the formula through the years for how they calculate unemployment, for how they calculate gross domestic product, for how they calculate CPI. They periodically change the items or the formulas that they use to gauge the economy, and that's how they can fool a lot of people. The yield curve has inverted before every U.S. recession since 1969. Central Bank chair said 2 more Federal Reserve interest rate hikes before the end of the year. Pretty interesting considering we had to skip the last one. So we need to skip one and then have 2 and then skip one and have 2. Is that the pattern? I guess that's the pattern for success, you know, in their eyes. Let's talk about Texas. I thought about moving to Texas many times over the past few years. You get more for your money over there, at least you did. But now prices are starting to go up so fast in Texas and states like Florida, where a lot of people went to, especially during the health crisis shutdowns. But Texas sets all-time power demand records as historic heat wave drags on. Talks of people with $200, $50, $300, $350 electricity bills this summer. I'm actually under $140 this month here in California, so I'm pretty happy about that. People think California is the worst. Not always. If you look around, there's a lot of other states that are more expensive in different categories than California. Car insurance in Louisiana is ridiculous. I talked to a client the other day, and they were paying like $3,000 for 2 vehicles, $3,000 a year. They had no points, nothing on their driving record. Anyways, the central bank says 23 of the biggest banks weathered severe recession scenario stress test. All right, well, here's the thing. This is the same central bank that gave a passing grade to Silicon Valley Bank, what was it, just 6 or 8 months before the collapse, right? So if you want to believe what these stress tests are telling you, go ahead, but I believe just the opposite. I believe these banks are broke, and if it weren't for the, the easy lack of regulations, I should say, the easy get-out-of-jail-free card, these banks would be gone, I think, already. Another thing that we predicted came true. Remember, maybe a few weeks ago, we reported how bankruptcies this year were on pace to be the worst since 2010. And I said it's likely going to get worse. There was a worse year. That was actually 2009. But up until now, it was the worst since 2010. But if it gets worse, it's going to be at where it was in 2009, which is actually the worst year. Corporate bankruptcies are speeding up to recession levels as the rate hikes take a toll. So bankruptcies got worse since I last reported on this. We were already on pace to have the worst year since 2010, but since then it got even worse. Another prediction, people said I'm doom and gloom, people say I'm over-exaggerating, people say I'm cherry-picking bad data to paint a negative picture of the economy when the economy is actually strong. Well, here we go, another example of how we are right. Large corporate bankruptcies have begun to speed up to levels not seen during the past two U.S. economic recessions, right? So we're going all the way back to the dot-com bust now, if this continues, which is going to be the worst in over 20 years, if it continues at this pace, signaling a struggle by more businesses to stay afloat as rate hikes take a toll. Weekly bankruptcy filings have approached their highest levels since 2020. I've got a chart here. Let me go ahead and put it up. If you look to the far right of the chart, things just got a lot worse. If you look to all the way to the right side there, that big spike that was just in the past couple weeks, just as we predicted, it got worse. It got worse from the last time we reported it. Again, another example, folks. This is not rocket science. All you have to do is look at all the evidence out there, connect a few dots, and things are going to continue to get worse. I'll say that here today, and we'll talk about the coming months about how, yes, things got worse. We'll continue to be correct here. This next one's out of the Miami Herald. Things are not looking so good for a lot of homeowners in Florida, as a lot of people in Florida overpaid. Home prices shot up big time in Florida. A lot of people came from states like California and other expensive states, New York City, people living in Illinois to go to Florida. Therefore, home prices surged, and now we're seeing articles like this here out of the Miami Herald. Homeowners face ramped up foreclosures. Here are some tenants that are fighting back. I guess they're going to fight back against having to make the payment. Maybe they're going to say they should cancel the foreclosures or do another moratorium. Right? Pretty interesting. We'll have to keep an eye on that and see what happens here. Let's go back to real estate. We talked about at the beginning. Jeff Bezos wants to be your landlord. There's a recent article here about Jeff Bezos' involvement in real estate investment. Bezos-backed Arrive Homes continues to scoop up rental properties, and you can get a piece of the action by investing in the company that's buying up these properties. So you could be a fractional landlord, so to speak, by scooping up the stock, and then they can raise rents on all their tenants, and you can make out like a bandit. Trend of fires in vacant buildings trouble San Antonio firefighters, folks. This is going to be a lot of fires coming up here, I think, for insurance purposes, because these landlords that own these vacant buildings that can't get businesses to move into them, I think they're going to be finding ways to collect, so to speak. I'm not going to put any names out there, but vacant buildings are going to remain vacant, and you're going to see a lot of hot action going on, so to speak. Let's talk about Overstock. This is pretty strange. Overstock, the retail website, is going to rebrand itself as Bed Bath & Beyond. Online-only retailer Overstock is rebranding itself. Overstock intends to operate only under the Bed Bath & Beyond name within just a few months. A bankruptcy judge approved Overstock's purchase of Bed Bath & Beyond's intellectual property. So Bed Bath & Beyond lives on online. Pretty interesting how failed companies get scooped up, failed banks get scooped up, consolidation, more monopolies getting bigger. Overstock's still not a monopoly because you have Amazon out there and a lot of online competition, but you know what I mean. The small companies and banks are getting gobbled up by the bigger companies and bigger banks. All right, folks, so more predictions come true. Let's talk about that down in comments. Please let me know what you think about the $5 tree now, with a lot of items going to $5. My 99-cent store here locally sells a lot of items that are $2, $3, $5. And packages are getting smaller, inflation. What else is going to come true? Please let me know what you think down in comments. Thanks everybody for watching. Keep stacking. It only makes sense to have at least a month's worth of food, water, and essential items ready for, I think, a big surprise that we're going to see very, very soon. Keep stacking, folks. Big love. Peace.